Now, if I were to be a beginner in the market, this is the exact way that I would learn to get entries and exits in the market faster. Now, I know during like the first stages of knowing about the market, and you come in and you look at the charts, bunch of things flying around, you might actually get confused. So in this particular video, I'm just going to make sure I simplify every single little bit of it. So with that being said, let's dive into the chart. Now, in terms of entry, there are actually only two entries that we can take in the market. It's either we take a buy entry in the market or we take a sell entry. Buy entry is when you expect the market to go up, and sell entry is when you expect the market to go down. Now, when we look at the chart, we can only see two colors of candlestick right on the chart, and there will only be two colors for differentiation. Now, different people can use different color to represent this candlestick. What I set mine into is green candlestick means the candlestick is going up, and red candlestick meaning the market is going down or the candlestick is going down. Now, this is the 1 minute time frame, and if you go look at this candlestick right here, now because the market is going up, that's why this candlestick is green. But imagine if it were to be going down, this would be red. So it's just two different things you can actually use. Now, we've known that there are only two candlesticks that can be on the chart, either green candlestick or red candlestick. Green meaning going up, red meaning going down. Now, once you've already known this, there's another thing we need to know also. The fact that I kick a ball does not make me a football player, and if I just carry a basketball and just bounced it, it does not mean I'm a basketball player. So it's consistency of something that gives it a definition. Now, if I go to the football field and I played football the first time, and I played it again, I played it again, and I played it again, that obviously makes me a footballer. And if I also carry the basketball and go to the court and try to learn how to make dunk shots, and I've also played in couple matches, obviously that will make me a basketballer, right? So in this way, one candlestick does not mean the market is heavily going up. That brings us to the two different types of trend that can happen in the market, which is uptrend and downtrend. Now, uptrend is accumulation of green candlestick, multiple green candlestick making the market to go up, and downtrend is when accumulation of multiple red candlesticks make price or market to go down. Now, if you look consistently, you'll find that we are seeing more green candlesticks than red candlesticks. It doesn't mean there are no red candlesticks. There are red candlesticks in here, but the most common one is the green candlestick. Now, this is why I say that one red candlestick does not mean that the market is in a downtrend or is making the market to like go down heavily. Now, safe to say we can call this an uptrend because of the accumulation of multiple green candlesticks making price to go up. Now, in the case of a downtrend is when the market is going down, when price is dropping. If you look right here, it's not like there is no like green candlestick. As you can see right here, there's a green candlestick, but it's not able to overpower the red candlestick. So let's put this in like an orderly format. Now, when the market is in an uptrend, what are you expected to do to get in a buy entry? Whenever the market is going down, what do you need to do? You need to get into like a sell entry. So now we've known all this, how are we going to be able to know that okay, the market is going to go in an uptrend or the market is going to go in a downtrend? Now, I want to give you guys a much more simpler way to look at the market, but this method I'm going to show you right now is only available on TradingView. So if you're using MetaTrader 4, if you're using MetaTrader 5, you'll be able to get like this I'm showing you. So you have to go to TradingView. So now, if you don't have a TradingView account, you can go ahead and click the description of this video, searching for that TradingView link, click in it and create a TradingView account, because this will actually help you a ton in the market. Now, for me to show you like this very easy candlestick, what you need to do is to come to this candlestick section, and right here you see different types of candlestick. Now, the best candlestick that I'll give to a beginner that will make it much more easier to understand what is actually happening in the market is the high Kanashi candlestick. So what you want to do right here is that you want to tap in the high Kanashi candlestick, and it just makes everything much more easier. Now this doesn't mean that you always use the high candlestick, because at some point you want to level up, you want to look at the normal chart. But as for this stage that you are in, I feel like this is the best candlestick that will help you understand the market very well and you don't get confused. Now what the high candlestick does is that whenever the market is in an uptrend, it goes ahead and color every candlestick to be green, and when the market is in a downtrend, it goes ahead to color every single candlestick to be red. Now this is here to make sure you're easily able to recognize the trend. Now let's say I was a beginner and I came into the market, I could just easily look at it and know that the market is going down. And with me knowing that the market is going down, I know that whenever the market is going down, I'm meant to take sell entries, and whenever the market is going up, I'm meant to take buy entries. Now I'm gonna give you guys like an extra thing that you can use with the high candlestick to give you like a very solid point in the market. What you want to do is that you want to come to your indicator section right here and type in moving averages. I already have that saved in. Now the moving average comes in default as 9 and it's best to leave it at that. Now the moving average is very simple. Now whenever you see price above the moving averages, it's trying to indicate a buy, and whenever you see like price below the moving averages, it's trying to indicate a sell. Now let's look at the market right now. Now if you look at this point, price or the candlestick is above the 9 moving average. You could see right here, green candlestick showing up. So with this, you can easily know that, okay, I'm taking a buy entry. And when you take your buy entry, you put in your stop loss below the moving average, below price. That will be safe. Now, if you look at this point right here again, price went below the moving averages. Now, price going below the moving averages and red candlestick showing multiple times. What does this mean? Sell in the market, right? So you go ahead and take in your sell in the market, and then you put your stop loss above the moving averages, or best above like the candlestick above price. Then you go ahead and take in another cool pips again in the market, and you rinse and repeat. Now this is a very simple entry exit strategy that you can use as a beginner. I don't know how simple it can get. Like, this is removing those, oh, you draw support and resistance, you draw this point. At that point, it's very confusing. This is just like the easiest way I had to coin out for you guys. So if you enjoyed this video, make sure you drop a like. Now if you want to learn more things like this and you want to be part of the family, go ahead and hit that red subscribe button. So with that being said, I'll see you guys in the next one, and peace out.